All right, Patrick's back, and
Hey, how's it going?
it's good.
So
Yeah.
the dip this week. So you got the traders spidey sense, and you went and you got hedged.
No, actually, I didn't because I feel pretty good about my positions. Like, unless we like mega nuke down to like 2,500 or something like that, I'm not too worried.
So everybody likes to joke on ADA, but ADA was basically the thing that funded Tradelayer in a significant way.
Oh, really?
Because I bought the dip after it listed on Bittrex
Oh, when it went to a buck?
because I'm a loser, fucking old lady money manager type guy. So I averaged out on the way up instead of hodling the whole bag on the way up. And likewise this time around. But my version of that this time around is Credo, sponsored by Credo. No, I'm just kidding.
Sponsored by Credo. Is
Yeah,
that
right.
QRDO? Is that QRDO?
Yeah. So they're only on like KuCoin. So I've
Whoa.
become a big KuCoiner now.
Wow.
And it's just the branding always had thrown me off. Like KuCoin, like what is it? The Ku Klux Exchange, like it's not a good
It's like
vibe.
oh wow, what a chart. That's super bullish.
Yeah. So I got into that boy at $1 ish and some change.
What does it do?
It is a Tendermint chain within Cosmos that wraps in its application execution. So you can build all kinds of applications, and then you sort of have this Tendermint chain as like a central data structure. And then you get to create your own coin to bond that chain. It's sort of like bonded proof of stake is Tendermint, right? And then Cosmos has Atom as its version of that. And the Cosmos hub chain is, the Super Mario Galaxy, like pick your world, warp world type chain. And then there's a bajillion things, right? And Polkadot is like a version of this that's more Ethereum adjunct, but there are also a lot of EVM based implementations in these chains. You can plug and play that. And then, so basically they do this it's sort of like a Fireblocks that's a little bit more auditable and self-controlled and factorable. I mean, well, Fireblocks is pretty factorable. They have a lot of, that's the whole point, right? But like Fireblocks is this corporate lease, and their thing is like the network itself. So their tagline is the network is the vault. And so I bought some, and it dipped to 80, and I was driving back in like September when we had the last dip, and I was like, fuck, I'm down like $600. I was like, $600, fuck, or whatever it was. And then I was like, well, shit, maybe I should buy more at 80 cents. And then I was like, I'll just hold it back, And I was pulling a U-turn to turn around, and I was just thinking like, hey, man, the network is still the vault, like just because the price dipped 20%, like the network's still the vault. Am I wrong? So no, I was right. It still is. And it pumped. Now it went up to 9 some change.
Like $8
and
bucks
I factored out. I sold half, and then I sold half again, lame stuff. But you know what? Those money management rules, that's how Da Vinci got his money. Da Vinci? I met him at this Irish pub, and that feller, the Irishman, he sold the pub and he put it all into crypto in the dep. And so I reconnected with him this year, and we swapped a little stories. And I was drinking mimosas on a Saturday morning or whatever it was, and I met Da Vinci. Super cool dude. And back in like 2016, before he was like a big influencer, he was doing this kind of strategy where he would just buy shit coins and he would apportion the bags very diligently, like 1% or 0.5%.
Yeah.
And he had like 160 positions on at any time. And he would simply sell half on a double, recycle the core principal, and then take out another quarter of it on the next double. And then you have your little moon fragment if it really goes up, or you can like have a trailing stop, I guess, knock that last one out.
Yeah, but isn't that just averaging into your losers?
Well, I prefer to call it deep fucking value.
Because you could have.
Some of them did become a liquid and like get delisted, and then like nobody's mining the crappy proof of work fork coin chain. But
what happens when you start with like 100K of Solana at 80 cents, right?
Oof.
And then or day one, right?
Or you're Kyle Samani, and you
no, you're like you're a normal person, right? And you waited for Binance to list it. It's $1.50 now, right? And you buy 100, you buy 100K Solana, so you're in $150,000 position. And then as it keeps on going up, you just start selling it off.
Right, and then you look back in anger, as the Wonderwall guy would say.
Yeah.
Don't look back in anger. I heard you say. Well, what if you
Right.
put it all into NFTs and then they go down 80% in Sol and you're like, fuck. and
I
there's
guess
and they
the
barely trade and you're like the Wojak guy, I'm crying blood. You know, that's the
I,
best.
I guess the thing is the thing that I see about the layer ones now that I didn't see back then is that layer ones, no matter pretty much which one you buy, you're always going to have an ability to borrow against it on whatever DeFi platform. So the primary lending
I
asset
feel like
is
this was the year, like last year, I was thinking about it professionally and talking to people in a professional capacity who are not yet so in demand that I couldn't get calls with them. And this year, I feel like is a big part of it, among a few other themes, is the mainstreaming of the idea that you can borrow against your coin and like farm derivatives yield and make your coin an income producing thing for you.
yeah.
Or you can do it leveraged, more deltas, or you can put it into real estate and get leveraged on that, or you put it into NFTs and get liquidated all kinds of ways. So you got to be careful with that. But the simple arbitrage of the futures versus your fixed rate loan is viable. And soon you're going to have U.S. banks. This is what's going to get us out of the next bear slump. I don't want to say
Yeah.
bear market because I actually do believe in the super cycle thesis. And that was my big market color that I wanted to impart to open this thing up before I get into shilling.
Super cycle thesis. Yeah.
Is well, like, what does that actually mean, right? So my
What
take,
does it mean? Because like I see people throwing it around a lot, but I'm not
yes,
exactly sure.
because
Like,
they're just aping Sue, right?
yeah,
But I don't ape Sue. I respect Sue, and I sometimes have had contrarian ideas that Sue didn't have, and then maybe Sue's a smart guy, maybe gets on board, like with the Litecoin, for example. I think I might have made him a Litecoin bull, but which is weird. It's a weird contrarian play to make, but I did bottom tick Litecoin. So that is one theme, is that it's like Jesus said, the last shall be first and the first shall be last. I don't think that literally applies in this case, but hey, it would be really funny if Litecoin flipped ETH or in combination with Doge as a proof of work DeFi NFT fun zone that the kids love, and I don't think there's anything wrong with that. And that's what these old boomery guys, these old Bitcoin boomer guys don't appreciate, is that it's fucking fun, Like I went to the Litecoin summit. I mean, look, we're shitcoining like right away in this
well, no,
podcast,
but
and I love
that's
it.
the thing, right?
We're
Is that
reveling in
like
it.
no, you get on some channels with some like maxis, and
Oh,
it's
they're
just not fun.
scary. I
Taproot,
feel so intimidated. I heard Jeet blocked me. I don't really know what Jeet Steele is or why he blocked me, but I heard him talking in a safe space about how evil NFTs are, and I was like,
oh my
man,
god.
these people are fucking frightening. Like, I feel so intimidated just like listening to this.
I mean, like, would you want? I want to invite people over to the house that we can like chat about stuff with. Also, we don't have to worry about ETH anymore or any other smart contract platform because now that Taproot is here, we have expressive contracts on Bitcoin.
Allegedly, but well, so the thing is, what Taproot does do. Okay, so let's get to the bottom of that one. What Taproot does do is it allows you to, for example, filing cabinet away more, let's call them atoms, more elements into a chemical structure. This is like, analogies to simplify this. And you can kind of get different ones, right? So what the idea was with Operturn, and this is why I've continued to bet my career on it, because I could have pivoted to being like an ETH guy 3 or 4 years ago after I stopped working with Craig Sellers. But I still wanted to stay into it. I could have gotten a job with my boy Santiago Siri, and then when that failed, I could have said, "Hey, can you get me a job at Molocked And I
Yeah.
know JavaScript, and I'm a UX guy. I could fit in. I could have done plenty of stuff in Ethereum, and I could have pivoted to being a Solana guy like a year ago, for example. And I would have done fantastically just from that. It's so easy to raise money if you have a Solana thing. There's like 5 or 8 marquee investors that will kind of, if it's a solid financial proposition and the team can execute it and it's on Solana, you'll get the round, which is great. And I'm in this weird space. Like I used to simp Terrence Yang, and I learned a lot about talking to investors from Terrence Yang, kind of wasting my time, but not wasting my time, which is why I continued to waste my time. Is
Yeah.
that I was actually not wasting my time. I was learning, by just interacting with this dude, and he's a tough guy to pitch to, and basically the unattainable 25K check. You know what I mean? Like, for fuck's sake. Like, also a cheap guy, which I totally respect, and barely made any investments. And then, like, there were a lot of Bitcoiner VCs who were making investments in like equity in companies that, you know, we're going to make revenue somehow, and they're going to be like good, clean Bitcoin companies. So because Tradelayer was premised on these meta coins, which really is a little bit more elevated than a token. And that was originally a term kicked around when they were pitching Mastercoin, which was the first ICO, but which would be a native token that was the root of some core functionality, which they didn't implement, and which I supplemented in the SPACs in 2014 when I started working with them. And I just couldn't let it go. I just had to fucking do it at all costs. So Opportune was meant, so getting back to Mast, Opportune was meant to be this catch-all where you can scribble a wedding proposal into it, for example, in plain text, or not in plain text, and there's a cipher, and you make a little front end that you go, hey, you send an email to your girlfriend, and then she goes through and say, yeah, type in the password, it decrypts it. Then she sees the wedding proposal. You can do this, right?
You can insert a hash, right? You can insert data into the
Yeah. So you could also hash, for example, a partially blinded or fully naked, if you prefer, but encrypted KYC document into one of these file protocols, and then, you know, hash the URI for that.
Can you run like a? Can you do something like what Loopring does, where they have a kind of like branching ZK this network, where like you can have all this.
You could put ZK rollups into an
ZK rollup, and then like every block you're just like writing a new hash into the opcode, and that's what
you could do. That it would be almost like Veriblock, but way more based. Obviously, ZK rollups are more interesting than what Veriblock was doing. So yeah, this is something that has been discussed. So I got a guy on my team this year. This was my big break. This guy, Sharuk Rao, brilliant dude. Just put out a call for JS devs with trading experience to help me kind of hedge fund up. Because I realized last year that raising more money and delegating is the way to success. And then that paid off big with this guy, because then he was so good at building up the trading engine that we used, that I asked him to manage the team. He's done a great job with that. And this has given me the room to make an NFT, metaverse, and video game, and a few other projects this year. And to just focus more on the business, and to focus on, the markets have sucked my time and energy a lot as well. And I've made good revenue, and I've punted out the runway more. And, so it's like the market pays me for my time. And that's not always true, but that is true in these 2017-esque years that come from time to time. So, So the whole point of the super cycle is to say that, okay, wait, before I get into that, the tying off the Mast thing, you could embed Opportune messages into Mast, and what they would effectively be able to do is constructively say, within the rules of so-and-so layer, this moves these tokens based on whatever covenant you want. So you can like hard code different logics in an alternative Bitcoin or Litecoin client. That's what Tradelayer is. That's what OmniLayer is. And it's a very open source and decentralized thing. And if this succeeds in any significant way, which unfortunately Omni didn't, right? Like, it succeeded with Tether, and then the Tethers went off to the cheaper chains. And as long as it was based on that, it had to compete on price. It couldn't. Bitcoin is very expensive to use. So I
don't even know if it was a price thing, right? I think it was more of like a UX.
The slow block time as well.
Well, yeah, slow block times UX.
It ruins your day sometimes.
Yeah, exactly. Yeah,
it really ruins your day, because you're like trying to get shit done, and then if you're like me, you get hung up on it. You're like, fuck, and gotta wait.
Like, I don't think anybody minds. I don't think anybody, like, the big traders don't mind paying $150 for a Uniswap transaction with their USDT and USDC. They just want it done, right? They want the opportunity.
Sure. Yeah, no, I've been using Solana for the NFTs, and the UX is so smooth, and you go and just swap more USDC, and it's bing, bing. It's like immediate. And what's dangerous about that is it lulls you into a false sense of like, oh, why isn't everything like this? And the answer is, well, running a node of Solana is an
It's
enterprise
crazy.
proposition. Yeah.
Well, I mean, you've got to have a server. I mean, like if you can have a server in your house,
Yeah. Yeah, it could be like an expensive hobby, but it's not a hobby for like anybody. So my thing with Tradelayer is we're launching with the node reward, which is kind of like a faucet. It's a perpetual faucet, and it kind of accelerates over like the first year and some change, and then it kind of slumps back down. So in like 3-4 years, it gets back to the same per block rate. But then it's like a tail emission, and it's kind of a tribute to the underlying blockchain. So in Bitcoin's case, everyone, and in Litecoin's case, everyone's just going to arbitrage that value against the fees. So if it's too expensive for the fees to justify it, people will lay off and it'll re-equilibrate, right? Just from the net. Yeah. So it's like it just it'll get arbed away in the long run and just become revenue that we're just donating effectively in perpetuity to both people who are trying to get into it and therefore subsidizing running a full node. That's how you earn the reward. But also that we're essentially losing revenue in perpetuity to the underlying blockchain, which is essential because that's how the blockchain gets secured in the future anyway. So just to tip my hat, like in tribute to the king, I'm doing this as a Shakespearean bard trying to build a culture on top of this city. I'm not trying to usurp the kingdom, which is the problem. A lot of maxis would give me shit for and call me a shitcoiner and stuff like that because I dare have a token that accrues the value, and that people can earn, you can have it emit in a dynamic way. It's interesting. So like with Mast, what you're going to effectively be able to do is move around UTXOs with differential logics for various multi-sig scripts. So that means you can get into more elaborate custody. You can do join vaults. That's kind of interesting. The other thing you can do with Mast is you can, and Schnorr signatures, you can greatly condense discrete log contracts.
Wait, hold on. Just for explaining,
let's slow down.
Mast is Taproot, right? Well, hold on. Let's go back to super cycle. Let's finish up the super cycle thing, and then we can.
Okay, so my thesis with the super cycle is that if you've been listening to your friend Duganist all these years, or even recently, I've been talking about Bitcoin dollarization when everyone else was talking about hyper Bitcoinization. And I'm saying, no, fellas, here's the centrist take on radical phase transition instead. That maybe is more descriptive and plausible, and maybe it's just true, and the other one isn't yet anyway. And if it is, would it really be politically smooth? It wouldn't be, would it? So that doesn't sound good. It sounds like hyper Bitcoinization. It sounds a lot like hyperinflation. And you got JD up on the Twitter using the H word and spooking all of the New York Times people and so on. No, you can't say hyperinflation. No, it's gonna become real if you say it. Jack Dorsey said it. That was the turning point.
I mean, they're like partially right?
They might be right. It would be bad though. The point is, it would be fucking bad. So why don't we just what's cool about Ethereum people is they're actually utopian.
Yeah.
And then Bitcoiners are like, well, as a conservative pragmatist,
not even conservative pragmatist, as a quasi neo Goldbug libertarian.
With possibly, transphobic reactionary views as well, right?
Yeah.
And racist maybe. So there's different Venn diagrams within the community, as I like to call it. It's community. It's the Bitcoin community. It's eclectic. There's transphobic people and there's non-transphobic people in the community, and so on. So anyway,
when you compare and contrast the Bitcoin community to like the ETH community is like pretty open and inclusive, and they're like, yeah, we just want.
Have you met one transphobic person in the ETH community?
No, it definitely doesn't exist.
I've not seen any transphobe posting from Ether people, but I see it all the time from Bitcoin people. But anyways, so that's unpleasant. But let's move on. The point being that everybody expects volatility, and that's what's going on today.
Let's go back. I want to break down your.
I'm going to finish my point about just the super cycles in particular. Okay, great. We bounced off of 57, so I can just chill and enjoy this chat.
It's not about. I don't think the super cycle is not about, like you're saying. It's not about hyper-Bitcoinization or inflation or anything. It's about dollar creation
It's about
through
Bitcoin dollarization and
Bitcoin dollarization
and crypto dollarization.
and I
Sorry to
think
trigger you with the C word, guys,
yeah no,
but
but
other
I
coins
think
will pay yield too. Yeah.
exactly right. Like these digital assets allow for extremely low cost borrowing of dollars, right? Through some sort of credit creation, whether you're going through like a centralized lender like Celsius or Nexo or BlockFi, or whether you're using DeFi. So you can just create dollars out of nothing, and this is one of the probably
But
biggest
you're
driving
not
factors.
creating dollars out of nothing, really, because people are doing. Because okay,
Okay,
if it were that simple, you could just buy any shitcoin, and then you could sell the future at some huge markup, and you're like, this is, and it's on a DEX or whatever. So you're like, no
right.
custody risk, and you're like, cha-ching, boom, right? But then there's still liquidity risk. So if that's the first and last trade that ever occurred in that coin, that would be, that would be bad for you. So that when you scale up the size, and in fact, this is what the market's going through now as volatility continues to contract, which is my sort of quantitative thesis about the super
Oh, I don't
cycle.
believe that. No, I don't
It
believe
is,
that.
you don't believe it or you do believe it?
No, 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 no. I don't. I
I think
don't think
volatility is
that.
going to keep going up.
I think volatility remains constant.
Well, it's not. Well, there's the volatility of volatility as well, so it's not constant. In fact,
Okay, but I'm saying
the
like
first differential of its change is not constant, also, right?
I'm saying like the median volatility.
It'll just be volatile forever.
Just be volatile forever. Exactly, because like
But
there's a
wait,
there. Okay, so
what if it's a little bit less volatile? Let's just use our imaginations. Now, I'm with you though. But like, for example, we had a 60 odd percenter in the middle of what is ostensibly a bull market. And in 2017, the equivalent correction was like 29-ish hundred to like 18 or 1780 or whatever, right?
right.
So it was actually, that was a smaller one. And,
Well, hold on. I say median volatility, right? And it's more at like the lower percentiles, right? When you look at the higher percentiles of volatility, so you're talking about like we no longer get the big 30% moves in a day, right? But we still see 7% moves pretty often. So I don't think that like the outliers, because it, like as you know, the outlier when it comes to using standard deviation for volatility, the outliers have a bigger effect than kind of the median and the average, right? So, the outliers will affect your standard deviation volatility metrics in a bigger way than kind of just your average volatility that you have.
well, that's what
So,
Skew tries to price in, right?
right. So if those outliers are decreasing, which I will say yes, you're no longer having these like huge swings, but on the day-to-day basis, the average volatility the median volatility for Bitcoin has pretty much stayed constant.
Which is
Since
healthy for the yields, but also the point being that the yields are now more tight than they were earlier this year,
right.
right? And so that I think is an expression of the thesis that there's a lot of this dollar denominated funding coming in just to farm that,
Yeah.
and that
But
this
my
is
my
mostly driving DeFi, and this is
yeah,
what the Gensler ETF approval is about. So all engines are go for Bitcoin dollarization,
right.
and what it doesn't entail is a FOMO bid that makes a new all-time high breakout act like maybe gold did at one point as well. And gold was also tamed, right? So I think they're taming it a little bit. And it's not like a Bilderberg conspiracy. It's market maturity. And what you might see is that these percentages do stay meaty periodically. There might be 50, 60 percenters, and we just go through those instead. And that way you might average even as little, not 100% average annual performance in some change, which is where we are now on a
Mhm.
trailing, I think, 10-year basis. But especially once you get those first few years where it's like going from infinitesimal theoretical pricing to like whole dollars, you factor that out, and it's only up 60,000x or whatever, right? So it doesn't sound as crazy. And then what is going to keep driving it is going to be this cyclical rotation from like a world that depends on fixed income, right? Like most people don't
Mhm.
appreciate this. And then what ZERP was about is trying to shift more capital out into stocks so that you could keep paying the pensions. And they had to architect this Fed put and maintain that level of performance. So then Bitcoin delivers this performance, but for various reasons, various institutional reasons, in order for pension funds to truly be buying Bitcoin for this, here's what it's going to take. And I think it'll get there. And then by the time it does get there, the real inflation adjusted yield that will be available will not be as amazing as it is today in this trade. So you would need to have like a spot ETF product that's probably not an ETN, but is segregated storage and all this. And it would need to be like something tradable within Europe or within, like, it doesn't seem like North America is as likely. And then you would need to be able to hedge like essentially the CDS on the solvency risk in the underlying derivatives that you're using to dollarize it, so that you're covered all over the place. And then you may also have you lose some of the yield to basis swaps to put it back into euros or pounds or whatever you're based in, or dollars if you're a dollar-based pension fund. I think the USD pension funds will be maybe last in this race. So it takes a long time to get all of that sausage made in order to serve it to the most regulatory regulated money. But this is what really moves the world, right? It's like the bond market and the dollar rate policy and the other ones kind of hanging off of it.
Right. I think I remember in one of our first conversations, we were talking, and I think you said something like yields and interest rates matter much more than price ever could. And it's
because there's this parallel money supply that's price insensitive.
Right.
That is just yield sensitive.
Mm-hmm.
And that's the dollarization, right?
Right.
So, El Salvador is interesting. Maybe they will be innovative. Never mind the bollocks.
Well, hold on, wait. Before we get to El Salvador,
that's a deep
topic. I want to go back to the volatility point. So, okay, so super cycle. So taking a more centrist view, super cycle is driven by increased borrowing of dollars against, or euros, or whatever you want to denominate your stable currency at. So you have a highly volatile 100% volatility asset like Bitcoin or whatever other crypto you want to go with. And then there's borrowing in a stable asset, if you want to call it stable, of like dollars or something else. And this creation of debt, this debt creation, is what leads to the market getting ever bigger and ever bigger, because having an asset where you can use it for immediate as collateral, essentially acting like cash as collateral, to take dollar-based assets, is like way more powerful. And especially because the yields for borrowing those dollars are insanely low. You can borrow essentially at 0%, or even get a negative rate if you're doing it correctly.
The dream.
Well, no, I mean, like there's a couple of platforms that I use where I get paid. At least it's in like a governance token. You get paid to take a loan, right? As the platforms are growing. So but let's just say it's zero, right? There's many platforms where you can take a 0 or a 50 basis point dollar denominated loan against your Bitcoin without any checks, and just go off and use it how you with. A lot of that money flows back into getting more leverage, just buying more of whatever asset you have. And that's what leads, and that's what I'm saying, is that's what leads to the higher volatilities, because people are getting probably a bit over leveraged, like you see recently. The market moves pretty quickly. They have to unwind, which leads to more market volatility. And this is just continued, and it's going to continue so long as there's easy access in these markets. And we're in a non or loosely regulated environment for Bitcoin and other cryptos. So I think that's kind of like my
cool
basic...
is the wholesale lending, not so much the derivatives, is actually very regulated and very institutionally friendly. So we're seeing there's been a lot of that volume growth over the last 2 years. Yeah. Whereas in 2017 through 19, it was all about the offshore retail casinos. And then like what FTX is doing is so brilliant. They're going to basically compete with the CME and with US banks. I mean, I don't know what the licensing details might. Maybe they'll acquire a small bank.
Yeah.
And they'll call it FTX Bank.
They should just buy Silvergate or something.
Well, or they could buy a really crappy one for just the license value and then Silvergate it the fuck up with their engineering and UX and integrated vision. Either way, they're definitely doing impressive work there. And the wholesale lending, the fact that you can do these secured borrows on FTX, it's very elegant. So like the final roadmap for Tradelayer, if you asked me 2 years ago, I would have said, oh, we got the decentralized stablecoin. And I realized that we can't really, like, everything in DeFi hinges on this problem of like, what is a dollar worth? Because that's still very salient to everything. That's kind of the whole point of DeFi is some kind of dollar or XYZ denominator type swap. And then the other thing to appreciate based on what you were just saying is that derivatives and loans are actually kind of the same thing if you really think about it. And so that's why you can do like a reverse cash carry. There's this 70-something Bitcoiner guy. I was talking about the reverse cash carry on Twitter like 2 years ago. And then he was like, I have been trading for 40 years and I have never heard of this. Hold on, comrades. And I was like, okay, thank you for your contribution. Reverse cash carry is instead of buying something fully funded with spot and selling a derivative a little higher, getting paid in a dollar equivalent.
Well, it's cash and carry. So cash and carry would be like owning Bitcoin spot, going to a futures exchange, and selling a future in an equivalent.
Or the swap. So you don't have any term risk, any basis risk, right? Yeah. So if you're trading bonds, the longer the duration on the bond, the more volatility in the price of the bond. It's the same way with the premium in the futures, whereas swaps are like a day-to-day variable rate money market fund. So you have less, it trades closer to the index, and then maybe it pays you the most if things go up, right? So that's curve trading, kind of the basics. So if you took out a fixed rate loan, you would be tempted to buy many things and just YOLO it. But let's say you're like disciplined, you're like, okay, I'm doing this strictly for, like, I got a 0% interest credit card, I'm gonna live off of it, and I'm gonna put my paychecks into or whatever type thing you got, or I got a wholesale loan, against my Bitcoin for a good rate. And it's going to get competitive. Like soon, all the major US banks are going to be getting into this game, because if they can lend billions of dollars safely and get a few percent on it, it's quite a good business for them. So that's coming. That's going to arbit tighter. But anyway, so reverse cash carry is like, I borrow the Bitcoin and I short it, I sell it spot, and I have all this cash. And then I keep a little bit, I guess, if it's an inverse quota, and I buy this swap that's paying, or I buy this discounted futures contract, and I wait. And I'm hedged because of all this short Bitcoin cash position. And so you could, like, for example, in practice, like, keep buying little bits of Bitcoin and topping it up on the exchange or whatever, right? But like with something like what FTX does, you don't have to do that, right? Because they've integrated the derivatives moment-to-moment P&L with the other negative number, which is the dollars you've borrowed against your long coin positions, or vice versa. You can do a withdrawal from FTX without even having a coin if you've got other assets on there, and do like payroll in like Tron or something. Or I use Litecoin. I like to use Litecoin for payments. I'm like a weirdo in that way. But, cool people use Tron USDT to do payroll. So whatever, like either way. And then you would like pay it off later, right? Like, so maybe it takes some time to clear. You're doing you have to do Bitcoin, takes some time. So you're just chilling. It's like, you don't even worry about it. And then you just buy it to cover once you go sell it on the other place, right?
Yeah.
So that's very handy. And like, I want Tradelayer to have that with the lending feature, where like you want to trade this USDC denominated derivative, but you only have synthetic Bitcoin. So the protocol in one swoop would eat into the lending book of USDC against Bitcoin for whatever rate is at the bottom of the book. and then that would become your initial margin on that trade, right? So it would be kind of seamless in that way. The other thing that FTX does is when you borrow more than the value of your coins, you can't withdraw anything, obviously. But then you can like go bazooka with that. So you could be leveraged long with a certain funding rate that changes every 8 hours from their lending market, and then short the perp, and that may be a useful trade to do as well as a variable to variable interest rate arbitrage, which are more like, so like for me, like day trading is all about makes legging into interest rate positions that might only be good for like 8 hours, or might be good for like 16 or 40 hours, or maybe a whole week if you're lucky. And those kind of days are gone, I think, for the most part. They're more mild. I remember in April they were throwing out Bybit 15 basis point payments and things like this. And then you just try to get long as much as possible, so I'd be like 8x, I'd be like 4.5x portfolio leveraged, 8 to 9x leveraged on either leg. And so the other thing that we did with that is I've been a copper subscriber for a little while now, mostly hoping that FTX will get on Clearloop and I can do all these ARBs really efficiently. But I am kicking that up. So we made an API integration where you can be like crazy leveraged. Like, and as far as I can tell, like there are only so many funds doing it. There aren't so many companies like Tradelayer where we like do stuff for the community kind of. So we'll integrate probably this support into our trading product, Spread City, which is an executing algorithm as a service. So if you want to leg in to like let's say you're long Deribit's at about 0, and then you're short CoinFlax, and that's going to pay you like the 1 basis point or something like this. Or there's just enough basis points in it. And then you want to go crazy on the leverage, and you're going to sit for like this half a basis point, but you're going to lever it up like
100 times.
I mean, you wouldn't want to do it 100 times just because the latency, you never, or maybe there's an operational risk. So then we have this fail-safe system where it's maintaining a book of stops and take profit orders, so that in case of the operational risk that suddenly you're not running the algo anymore, for example, it would just crash into some kind of unwind, and you might not necessarily lose. You're like, you're not going to get your head chopped off. At least you might lose something on slippage, or maybe the last one doesn't go your way, but that's a decent airbag system. Of course, trading like this, if you did it with any size, like if you actually put $1 million up and you did this with like 50 million bucks either leg, you might actually create reflexive convexity and concavity in your P&L probably from the added liquidity risk. So this is really like a product, I suppose, if you're going to do copper, you're going to have to pay this $1,000 monthly. So you need at least like 100 or 200,000 bucks to kind of make it worth it. And then you could be like going crazy with like 1.5, 2 milo positions on that nut, right? And it would be worth it, right? So then, I don't know. I thought that was just fun to mention. It's not something like I'm only going to do personally for an allocation, like 12.5x leverage. Yeah. And just might be worth it for that. Yeah.
But if you're a normie, like why wouldn't like messing around with all the exchanges seems a little bit too much. Like you just want to go to DeFi and
well, like, this is for like semi-pro people who want to step up their farming game.
Yeah,
because there's still a lot of farming to do in CeFi.
Yeah.
I mean, that's where still all the volume is for the most part. Now DXDY has been giving a run for the money, but here's the thing, and this is why I'm a bull on Tradelayer, so much so that I decided to do it and continue to do it, which is the amazing part. As I survived the bear market, I almost went broke, and I bamboo like saved my life. Basically, I would have jumped off the balcony like Steve Bang in June when everybody had a Mars in retrograde suicidal urge like one night, because I would have been broke. It would have been horrible. But I wasn't broke. I had just done. I remember last time we talked, I had made one trade that like I was living off of in that period in June. And then I raised a little bit more money and I got a couple more devs. I got a guy to help with the porting stuff. That's Ollie's not strong on that. I got a Bulgarian guy to do the JavaScript. Bulgarian guy is a fucking stud, man. I mean, he's like a skinny, kind of lanky guy, but I mean, like he's as a programmer, he's a stud. He's a hero, man. He's developed so much for this wallet app. So we're giving an interface. Remember Bitcoin QT back in the day?
Yeah.
And everybody still just uses that UI. They tweaked it a little bit, and it's very old school. Qt was a C++ based UI framework from like the late 2000s. That's like Satoshi was like, here's an easy tool to do a de minimis UI. And for some reason, nobody ever thought, oh, let's make a really epic Bitcoin, desktop app to run on top of the node. And that's not actually literally true. There are companies building those in the latter year or so. And I don't know, I can't mention them all. I've seen them on Twitter, but they exist. So there's other people doing, making a cool, and like someone's doing it for Solana. It's called Citadel. So I think like desktop apps, I use the Tidal desktop app, right? Tidal, it's like better than Spotify because they went a little more native, and the sound quality is just a little bit better, right? So I think desktop apps are coming back because what's going to be cool in the future, unless you're like one of these, NFT haters or something. But if you're hip to like maybe don't trust the establishment and stuff, everyone's going to be into running more low level software. Not everyone, but the cool people. Like these Zoomers that are worth 6 or 7 figures because they started when they were 18. I fucking love these guys. These are my favorite people. These are power users, man. So I totally vibe with that. And they never got traumatized by being raised by boomers. So they're just coming fresh, like, oh, I'll just go long this dog coin. And then I'll flip into this thing and farm this, and then I'll buy into these NFT mints. And they do it, and they don't care about risk management because they don't have responsibilities very much. And then they can like make outsized gains because of that. And so then they're like so rich when they're like 22, and it's like, of course, they go to conferences and like spend irresponsibly, and that's in part what's driving the PFP thing. Is that there are a lot of these people who want some kind of cultural and tribal identity, and they're young and they've come into money, and it's a capital position still, so you can justify it. My PFP,
and you gotta flex on your bros, right? You show up at the thing with.
I feel like that's topping though a little bit the flexing. Do you think
flexing? No.
Do you think flexing is evergreen?
Yeah, it's always evergreen. Like it previously in the 17 cycle, it was Lambos, right? So, like
which is at least a depreciating physical asset instead of an appreciating intangible asset, which is obviously much better. And people are spending Lambo quantities of money on some of these premier NFTs.
Right. Yeah. Like here in Miami, like I came to the Bitcoin conference here in Miami in 2018. And like the big thing was that like Mex had just like rented out like 8 Lambos and put them up front, put their decal all over it. And that was kind of the meme of the time, right?
Now, the rise and fall of Arthur Hayes. That was I think that was an article somebody wrote.
Yeah. And now it's like, everybody's so much more rich because now we're 3 times higher than we were at the peak of 2018. That like all your friends have Lambos. So what are you going to do now? Right? You're going to buy one of 10,000 CryptoPunk because maybe, your buddy is not going to be able to do that. And then you can flex on him like that. Right. Or I think like the punks are like a very good signal of either you got money or you were early in the ETH culture of just buying stuff.
I bought one and then I put it up for resale, and then the 4.5 ETH, I think, or might have been less. That was probably the proceeds of that, less fees. That's lost in a MetaMask. I also neglected to sign an advisory agreement that was emailed to me in June of 2018 while I was fundraising for Tradelayer. And I just kind of like, I didn't commit to it because it's like, I gotta run my thing here. And this was a mistake because I could have gotten a lot of sand from advising on that. And it was like some dudes from Sabarasa, where I worked when I was 23, that were working there at Pixowl. So it was like a pretty good vibe. Um, it's unfortunate that I didn't do an additional part-time job in order to like really input into that project. But
Yeah.
hey, you can't do all
Can't
the
win them all.
jobs. You got,
Right.
yeah. I mean, this company, dude, this Tradelayer thing, man. This thing is, it's like being pregnant for 4 years, man.
Are you
It's
launched yet? Like, so what's going on with Tradelayer? Like, is it?
so yeah, we did a dry run on like basically a value like a token free like testnet, right? It's just like issuance. Um and all the tests passed, right? So we've been working on the last month. We've been working on the app, which is Layer Wallet, just making it run more robustly as it interacts with the node. There were a few edge cases. We've gotten like 2/3 of those smoothed out. Um, for the most part, I think people could run it without a problem by now.
Yeah.
And then we're doing a UI redesign on that. We're adding to that UI. So there's like a trading page. There's a page to manage your node reward farming. There's going to be a page to manage your multi-sigs. And I wanted to actually like design a UX and solve the problem around managing multi-sig signature gathering, including air gap keys. And then possibly later we'll add perhaps things like BitGo. That's like a server type third-party key, or more imminently integrating Unchained Capital's wrapper JavaScript's object-oriented API for doing Trezor and Ledger transactions. So you'll be able to include potentially multiple hardware wallets into your multi-sig and really go banoodles with it. And then, all these other like everybody's either doing MPC, who's like hip to multi-chain,
Mm-hmm.
which is why Credo was such a runner for me. And Credo has half a basis point fees. So this is like the only other project that I've encountered in my long journey across the Sinai Peninsula, where they are hip to like, this is going to be the future. Let's just position it. And those are our fees as well, as half a basis point for the Oracle stuff and for tokens. And then for the native stuff, it's going to be a quarter basis point. So that's still half a basis point total between the two counterparties. But then you can trade on the L2. You can aggregate in channels and effectively publish like once every day or every so often, and basically shave your fees down to almost nothing, right?
Oh,
So
wow.
you have to have this like inherent pricing power where the more liquid Tradelayer gets, the more phase transitions it goes through. So there needs to be a reasonable amount of liquidity before utilizing it on a colo basis at microsecond latencies really even makes sense. And getting into like, do we do any kind of counterparty value adjustment type games where we like belay on the cosine for like 400 microseconds just to see if there's any data, or for 10 milliseconds, people start to play those games when there is enough volume going on inside the bid ask spread of the traditional. So you think about like Bybit, they've got like a 50-cent tick and there's like a thick wall of orders on either side. And this is because the maker taker is so big that any hit is effectively a trade like way like $20 over there, right? So this is a problematic thing about the structure, but it's been successful in those instances. Or like BitMEX used to look like that, where you'd have this 7-figure, at least on one side, you might have a lip of like 100K or 50K underneath, and you can play games with trying to get into the queue and farm those rebates and catch arbs elsewhere. That's some trading that I've done. Not making money from that entirely. That's just padding my edge overall as I position for an interest rate differential. So anyway, as the market structure keeps getting tighter and people are able to shave down, like these fee structures create an artificial saliency dynamic in order books,
Mm-hmm.
right? So it worked in that time period of like 16 through 20, let's say. And now it's time to just shave this shit down to zero, man. And I think that's why the quant firms and the intermediate level traders and the spread traders are going to love it, because it's going to liberate them in a way that really nothing has before. And it's based on much better bones than these other things. So everybody's like really into Solana DeFi right now. And I think that's great. but you're not going to have the liveness guarantee of Bitcoin or Litecoin
Right.
with that. And you're not going to be able to execute without necessarily having a confirmation, right? So because I embraced this Lightning Network type cryptography of the 2 of 2 multisig locks, that is how you execute, right? And this is the whole the original concept of Tradelayer in like 2017 when I was kind of splitting off was like, okay, we need some way to ticket these trades. That's an independent thing, right? So 0x had an implementation. I thought, yeah, they're in the kind of the right direction there. I can do something like that for Bitcoin, but it wasn't until 2019 that I figured out it's got to be the 2 of 2. And that's the innovation of Lightning Network. And it's so smart. It's overshadowed by the silliness around like, no, but for ideological reasons, there's like a routing problem that we have to infinitely like scaffold around. And maybe that may be an unfair thing to say, but anyway. So Lightning Network and discrete log contracts.
Wait, hold on a second. I think there's a lot to unpack here. So,
yeah, let's unpack things.
Okay, so
it's your turn.
Okay, so Tradelayer is going to allow you to have derivatives and kind of debt-based assets like these stable coins issued like directly from Bitcoin, right? And the network security of Tradelayer is secured by the Bitcoin network, correct?
For the Bitcoin version, yeah, that's true. For the Litecoin version, it's secured by the Litecoin network. Yeah.
Right. So, I mean, I think that's one of the big kind of, I don't know if it's a narrative yet, but at least when I talk to the Stacks guys, that's their whole thing is that,
Did you do a pod with them?
Yeah, no, I spoke with them for OKCoin Live.
Cool.
Yeah. So I spoke with Manib.
Look at you. You're a media guy.
Yeah.
MCing and everything.
So I spoke with Manib, and his whole thing was like, look, we can build smart contract platforms, but it's not on Bitcoin. So we're going to use the Bitcoin network to secure stacks, or in your case, Tradelayer, and it's going to give us the most security out of any like proof of work blockchain.
So what their thing does with the proof of transfer is trying to solve the problem that plagued Liquid, which is why they're like trying to be the new Blockstream in a way.
Yeah, I don't understand that. I'm not deep enough.
Because Bitcoin has been stagnant. This is why Bitcoin's been stagnant, and now finally it's like, no, it's okay to be a Bitcoiner and like be interested in fucking anything that at all, like really. And so it's starting to get interesting again, and it's starting to get heterogeneous again, which is good. It used to be like that back in like 14 and 13 when I got into
it. Because I went full time in 17, right? And pretty much. I guess everybody that I started speaking to was either in the Ethereum community or pretty much in the Ethereum community, because that was the big thing to build on, or pretty much the only thing back then, right? There was no like other smart contract platforms, no L2s. And so from there, you had, I just like the narratives from 17 onwards, right? Like now we have DeFi, now we have, the rise of stable coins, now we're doing all this crazy stuff. And, the Bitcoin guys, you saw it with the TVL, like Lightning just suffered for years, which may have been that they were just building, but there wasn't there. You had, I think, 1,000 BTC as TVL, and I know it doesn't matter in the same way that like ETH Bitcoin TVL does, where the speed of the channels. And the amount of the
used to be that the Bitcoin on exchanges was sort of like the TVL, or maybe it's the other way around, that the Bitcoin that hasn't been moved for a long time,
right,
is the TVL. That's the HODL TVL. Yeah. That's like locked by the psychology,
right? But I think
all the dudes basically.
Again, but I think that's I'm not a believer in the hodling or hodling, right? Like,
sure,
put your money to work, right? Interest rates are there for a reason. Like, wrap your Bitcoin, take it to ETH, and use it as collateral to go do fun stuff with, right? And so I think the whole DeFi thing was just lost on most Bitcoin people, where they were like, why do I need dollars? We only care about Bitcoin here. Like,
it is. It's like the way that the vaccines were politicized. And by the way, there's like a 0.9 R squared on people who tweet about this and who also have these views on Bitcoin. You know what I mean? So it's like, if it had happened to be Trump who had won and then was like taking a victory lap about the vaccine, all of those people would be for it. If it happened to be Adam Back, who said DeFi means these core applications which are useful and which we want to support. We want to support on Liquid. Then Bitcoiners would have said, "Oh, great," So let's just all move on. We've addressed that there's been a dimming of the light a little bit, and
I guess
now
my
it's coming
question
back.
I guess my question is like there, Vitalik went and started ETH because nobody wanted to support an L2 on top of Bitcoin that had expressive scripts.
Well,
so
the funny thing about that is he went out for the hackathon in 2013 for Mastercoin.
Yeah.
So there was a moment where he did decide about this based on that project as a salient reference. But continue.
Right. So why was there such like virulent opposition in the Bitcoin community to building some sort of smart contract platform or something that allowed for more complex and expressive scripts to either run in conjunction or on top of Bitcoin? Like why was there such pushback into like even Stacks gets pushback, right? And I think
part of it is
I've listened to Manib talk with some maxis, right? And I think he's finally starting to like turn them around. I think they're still like very suspect of like the Stacks token, but at least he's using
don't
Bitcoin
hold
as a base layer, right? And
I'm holding it. I'm thinking about not holding it. It's a perfectly you can go either way. You can just have $10 worth of it. It's okay.
Yeah. So like, how come there's no L2s, like, or at least like functioning because like Stacks is functioning L2 now. Like, how come there's no L2s on Bitcoin that allow for expressive contracts?
Well, I want to unpack a little bit like what Stacks is and what Tradelayer is and what Lightning Network is, and maybe briefly like what other bridged chains and what Ethereum L2s are, but maybe not. It's a big topic, and a lot of people on other podcasts talk about that. So not that many people have talked about Bitcoin DeFi on podcasts in a high signal way. So I'll try. Okay, so Lightning Network is a series of bilateral 2 of 2 multi-sigs that get agglomerated, possibly with the support of third-party watchtowers who maintain essentially the power of hash lock time.
You have to open the channels with somebody else, right? Or you have to join a
right. So you invest some money in that. And then you get some reusable throughput that, based on the network topology, is either going to be function of the clustering and the liquidity per cluster, which isn't great. Mm-hmm. And this has been the early, but this is just sort of the initial molecular structure. And now it's getting kind of good, and you can route most of the time medium-sized payments. And congratulations.
Is it profitable to run a Lightning node?
Yeah, there's like sort of a difficult to quantify Bitcoin yield embedded in doing so. But so like Nick Bhatia tried to do that in 2018, and he cooked up about 46 basis points a year, which frankly sounds like a pretty honest to God bottom of the barrel yield that you could look at as a reference. Truly, I don't think that's bad. I mean, it's not appealing to me, but for people who are like ultra, they're the Bitcoin denominated pensioners type mindset, this is like the only thing they would dare. Like Bitcoin Tina would only do this for yield, right? I mean, I might talk him into putting a 2 or 3% or a secured loan cash carry into synthetic Bitcoin on Tradelayer, right? So to get around this issue, we had look, bro, I'm telling you, we had to have a token. We simply had to. Exactly. There was no choice, not even from a financing point of view, because there was theoretically a choice in the financing. I could have gone and begged Arthur Hayes for $100,000 to just, wouldn't it be cool if something radically undercut your business model on Bitcoin as a native thing? Maybe he would say, oh yeah, fuck it. Have $100,000. Maybe Bitfinex would have done that. I think there's a reason why they didn't do that with Omni. Right? Because where was their vested interest?
With Liquid, right? Because Liquid.
No, I mean Bitfinex with like Tether and like basically Bitfinex took over funding OmniLayer, and then used it for what it was good for, and then it quickly became like, well, we really just want Tether. Mm-hmm. So, but meanwhile, they've already adopted it under Craig's stewardship, and then Craig, funnily enough, was off trying to build the future of NFTs before NFTs were nomenclature. And I don't know where the hell he is nowadays. And he's like missing out on such a good party.
Probably retired on his island somewhere.
Maybe. Yeah. Maybe. I hope, honestly, I hope he's happy and solvent and well. So anywho, so for whatever reasons, we didn't get this opportune thing fleshed out until now. I've had to sweat like a hero coding shit in JavaScript to prototype and directing everybody and recruiting people, which is really the crux of my success and failure. This is my my third team, dude. Third.
Well, hold on.
I went through 3 whole teams over 7 years to be able to build this, and this is like the fifth wallet, the fourth and fifth wallets that I've built. And one was like a really short prototype, but yeah, go ahead.
So where's the L2s? Like, how come it's taking this long to get in?
Oh yeah, so I'm going to break this down. Okay, so we kind of Lightning Network is this agglomeration of all these connections, and it's actually very useful for clearing, and it would be even more useful because basically Lightning Network has gotten really good at routing around any dust amount to anywhere, right? You can like pretty much hit with that, and at like $5 to $10, it's a pretty good hit rate, and it can get a little cumbersome at like 100 to 200. But if you color those dusts as X amount of USDT, where each Satoshi increment might mean 1 USDT, for example, or might mean 10 USDT. You could use whatever rounding increment you want within a protocol, because it's really just tracking the ledger, right? And then you could use those USDTs to settle out discrete log contracts. So that's going to compete with me, and I'm okay with that. I'm just happy we fucking made. I'm happy we punted it. I managed to keep punting runway over 2 cycles.
See, I know. Survive. Yeah, last time we spoke, you were like, I think it was
down
depths.
Bad.
It was. I remember the first time we spoke was depths of the bear market.
Yeah.
Those are sad times. I look back on it and sad times. But everybody's.
I was actually really happy in 2020 because I had been able to sell some shares and keep the thing going. And when I got the money from Bamboo is like a hard ass. I don't know if you know him much on Twitter. He's hilarious. He's like a royalist, and he's a hardcore trader. And he's like, I think he's a bit older, and he's like very British. And so anyway, I like him. We have different kinds of personalities, but nonetheless, I really owe the guy because he really like turned the corner for me. And then like we were chatting in August, and it was like I was like, yeah, I guess I'm just raising at $1 million valuation right now because I don't have that much cash and I don't have high self-esteem. And he said, well, I will take the other side of that. And so he hit me up with another 19 grand. And then the guy who was in the February round hit me up, and a guy who Bamboo referred hit me up and put in. And that was how I was able to expand the team, because with just one dev, you can't really get that far. No. And then it was Not So Fast was the big backer in February's round. And I got a handful of people in, a lot of interest radar people and whatnot. People who enjoy my Twitter, which is weird because I have like a polarizing Twitter. So I ended up polarizing investors as well. And then the investors that I get, I do vibe with at some level. And the last guy not the very last guy, the last guy to put in was an NFT bro. And we wanted to do an NFT thing. It didn't work out. So I said, all right, fuck it.
Yeah.
You bought shares. Like, sorry about that. And that's cool because we're doing NFT stuff. But before that, it's this guy who's doing a binary options protocol on an Ethereum L2, and he was like investing in me to like hedge that maybe I'm right about all this, my pseudo maxi anti-ETH, like be careful about that stack fellas type talk. Maybe I'm right. So I was like a good way to hedge that and sort of decorrelate in another dimension. So I fully like appreciate all of that. And then, every 10 grand I raise from investors, every 10 grand that I claw out of flipping NFTs or farming interest rates or climbing the Bitcoin wall, it's just been like that. But okay. Meanwhile, Stacks raises, whatever, $2 million and then like $50 million. And then Munib linked me to this. He fucking filed a form that specifically says like, this is actually a commodity now. Like there's like it's like a
Yeah.
U20 or something. Like I was like, damn, I should get one of those. Because when they offered the Reg A, that is like literally a securities offering. So
Right. Yeah.
we're all past the underlying. Is this a security? Is it not? Everything has some properties of a security in the space, including Bitcoin. But Bitcoin has very little. Like there's an expectation of profit with an investment of money, or an investment in mining gear, which is an
Well,
investment of money.
the closest thing that I've heard, right, is that like the actual like thing itself on the network, not a security, right? But trading
The
it,
underlying tokenness, the key control thingy
exactly.
aspect,
Yes.
like the T part of an NFT is a commodity, and the art that an NFT links to is also a
No.
commodity,
I was
right?
saying that like the Bitcoin itself that exists in the network in its
It's
ethereal
just a
state,
commodity.
it's just a commodity, right? But as soon as you put it into an exchange, you're no longer trading that ethereal digital
Oh, you're
Bitcoinness.
saying that there's
You're now trading a product given by Coinbase or given by
so as soon as you
OKCoin
get
or
into any
something.
kind of real liquidity, the expectation of profit
Well, as
enters
soon
into the
as you
equation,
no,
which is
as soon as
fine,
you
right?
as soon as you deposit it into say a, an exchange, a centralized exchange, you're getting back a token receipt. You no longer control that Bitcoin anymore. You have a derivative
Yes,
product
that's
of that.
true. That's a debenture
Right. So yeah,
that pays
you
nothing.
have a debt, right? So
Yeah.
that probably should be a security, right? So if the SEC wanted to,
Well,
they
then
should
then
probably
that
go.
would complicate things greatly, wouldn't it?
No, I don't think so. It's just more about like reporting, right? It's. I don't think it would cause too much of an issue, and I
The
don't think
thing
it's too.
is, because they're covered by Bank Secrecy Act under the expanded guidance from 2013, 14, they didn't. You get grandfathered into one agency's regulatory aspect or another
Mhm.
because the United States is so legally heterogeneous that to do anything less would make billions type legal drama seem relatively banal in comparison. And I mean, already you get the dueling regulatory interpretations, and it's confusing. But the truth is, they're all commodities and they're all pretty much securities
Yeah.
except to some extent. So like Bitcoin is very much not a security, but it is a little like there are many corporations that are arguably securitizing Bitcoin by putting it in their treasuries, having it in a publicly traded stock. Or, I mean,
Right.
Grayscale has securitized Bitcoin, right? But it doesn't retroactively go, oh, well, Satoshi did a security offering, right?
Right. Right.
So the question is only relevant really when it comes down to how did you raise your money to fund the development, and arguably how did you raise your money to bulwark whatever financial product structure, right? So for instance,
Mhm.
this bro Kento took my idea. He didn't take my idea. I mean, I've been kicking this around for years. It's been out there. He took the idea of a derivative backed stablecoin, and he went and raised money, and he did it on Solana, and he did. It's called UXP protocol. So he did a token offering, which is for sure like a securities offering with no KYC. You just come and say yes to this phantom, and it does its thing. And all of that money is going into an insurance fund that's endemic to the protocol. So like with Tradelayer, our insurance fund is going to accumulate whatever balance from actual trading, which I can see that you'd want to go take a bunch of VC money and some retail money on top and stuff it in at the outset, and that boosts confidence. But then you got to do like a security offering, sort of, right? So I'd rather have that accrue organically.
Wait,
So
hold
so
on a sec.
anyway, yeah,
Can we talk about this Delta neutral
UXP,
stablecoin idea?
yeah, sure,
So I'm guessing I'm just going to run through my kind of idea of it without even looking at the thing. People commit, let's just say the base collateral asset in this case. So let's say it's on Solana. They commit Solana. They can
sure,
mint the stablecoin, and then the protocol in the background goes to what, like Serum or wherever they can get futures,
exactly.
and then they short it,
Mango
right?
maybe has perps, yeah.
Um, what happens to the basis? Does that just go? Is there like a token that accrues that that money, or does the stablecoin accrue it, or how does it work?
I am mad. I don't know exactly. He is either pegging it to fixed maturity and having periodic events, or he's doing a basket and blending it and having more frequent payouts. I'm not sure. I haven't taken it for a spin yet. So yeah, the
Well, how
duration
would you
and
do it? How would you do it? I mean, like in my
where
mind,
I'm doing it with perpetual swaps, period.
well,
So
I,
there's
I
going to
would
be
have a token.
one.
I would have a token, right? I would want to issue a token in this case where the token accrues the basis,
Yeah,
and you earn the token by taking by minting the stablecoin in the first place.
sure.
Yeah.
Yeah, you accrue
So
interest. Yeah.
yeah, well, you accrue interest. So yeah, you're essentially paid out the token, or and then once the token emission is complete, then it just goes to. I mean, you could have it like I don't know if you could have an infinite token emission.
So like the way that I originally envisioned it with Tradelayer is you would create like synthetic Bitcoin and then you would create synthetic dollars. The problem is where does the dollar denomination data come from? And I've been fixed on this idea that you solve the Oracle problem by aggregating on-chain spot trading with some non-trivial frictive aspect to it. It can't just be zero fee or it's too easy to wash. And that VWAP becomes theoretically discountable, but manipulation resistant in a concave fashion, concave against the manipulators. And that you could use that as your oracle, right? So this solves a problem for DLCs. This solves a problem for everything. And I think once people figure this out, DeFi on ETH and Solana will copy this insight, and maybe they'll learn from it. Maybe they'll make like a thicker rebate setup, and maybe that's more convex, right? So I might have to think about that before I pledge those values. But yeah, so on-chain volume is going to be really cool. I think what Kento's thing is doing is relying on futures or perp markets that use Pyth oracles, which is sort of Solana's answer to Link, right? But my answer to Link is that basically, like if USDC were on Tradelayer, for example, or other issuers, I'm open to speaking with people. Of course, I'm interested in like really good legal structures and whatnot. But any legit stable coin, and maybe to be legit, it needs to have some KYC hooks, and maybe that limits the uptake. But you have these volumes, and even if you're out here in Taproot land and you don't want any KYC, you could be trading a DLC based on that on-chain data
Mm-hmm.
that might inform you about what's the dollar price of Bitcoin, for example. So this is a problem that everybody still has to solve. We're still way too dependent on dollars. MakerDAO has is treasured up with USDC that's wrapped from Curve, so they can't blacklist it. That sounds specious to me. What happened to DAI being a good old like native thing? Well, it depended on oracles, so it's the same Ouroboros, right? So I realized that I wasn't going to be able to just solve this through hand waving, and that other people maybe haven't made that realization. That's why they're still hand waving about it. And it's just it's like a regulated business's problem to like issue these things and have people trade it. And that's the constraint of dollars, quad dollars, unless there's some other skin in the game thing. So like that's what Link does. Like Augur did this originally. It was like you would lose your tokens if you wouldn't play in these voting games about what was the true price, and that the game theory would keep it honest. That didn't really work. It was good enough to pump the pitch, but people, and this is the problem with all the governance tokens too, not to get too maxy here, but I feel like a lot of people are like, oh well, there's governance, so it's got value. And it's like, yeah, once you get enough money locked into it, or there's enough usage that the fees people pay are material, then changing those numbers around has material value. Therefore you can value the token based on just that, right? And then there's additional monetary premium because people believe in this thesis of governance. And I just don't think it's a good idea, guys. Maybe we shouldn't try governing. Maybe we should stop.
I think it's governance. It's not governance. It's just governance minimization. You should take as
Sure,
much. You should take
but the
as
problem
much of
is
the. Yeah.
it still overestimates vastly what the holders are willing to do, and it should just be like with our token. It's just there as a native collateral. It has this buyback from the Oracle side. It gets half of the fees, and from
All
native,
right. Hold on a
it
second.
gets the
So
fee.
you take your Bitcoin, bring it to Tradelayer. You put it into one of these derivative contracts, you put it into a contract. You can mint derivatives or a stable coin, right?
Yeah.
And then the fees that come from that go to what, buying back the token?
To go into, because some people would do it where it just destroys the token. It's like burning NFTs. Like you're an artist, your art didn't sell it. You're like, don't worry, everybody, I'm going to burn half of my art. And they're like, yeah, we really support your art. Go burn it. And with the token, it's like, look, this is money. Why burn it? Like it's almost like disrespectful to the money. So it goes into the native insurance fund for the BTC total perp or the ALL LTC perp. So we focus on just having one contract. And what's interesting is the BTC pairs on these coins, because BTC is such a volatile asset relative to the dollar, right? So you can measure how much BTC USD's volatility is. And then you know that some low cap coin, to not use the proper nomenclature, is going to be easier to move around. It's going to be more volatile.
Right.
Which may mean its dollarization premise or its Bitcoinization premise is gainful, so you don't have to experience all that volatility. You can just kind of rent into it. And so that's what the synthetic Bitcoin and the synthetic Litecoin is. It's like it's really hard to get Bitcoin denominated yield, and it's really hard to get Litecoin denominated yield. So if you're just willing to take the risk of the systemic like liquidity being there, so you could like cash out to Bitcoin and a little few cents extra on it later, then it's one way to do it, right? Or you can take the opposite bet. You can go long that perp, and you can say, no, this is going to outperform Bitcoin, and I want to be in a high risk position here. And those people are the salt of the earth because they expand the quantity of synthetic Bitcoin that can exist, right? So then once you've got a bridge there, people can just swap Bitcoin for synthetic Bitcoin, and it can be reasonably tight. And then you can use that as collateral. Because we had that Civil War business, and before that, I remember when Luke Dasher wanted to like tighten the op return down to like very few bytes, and there's a whole debate there. There's been this contingent in Bitcoin, and so
bring the mic a little bit closer. It's a little bit hard to hear.
Oh, now. Sorry. So like I was saying about stacks earlier, that they are tethering the state of a parallel chain through like a block. It's connected to like the block header when a miner gets it. So they've incentivized miners to basically kind of merge mine it, I guess is a good way to put it. But it's a little bit different. It's a little bit but okay. So that's not my thing. I can't give you like the best explanation of that. But somebody did say, I heard this on the Spaces, that Stacks is a layer 1.5, and I can see that because going into the blocks, there's this sort of Veriblock type addenda that I think the miners put it in, and they put it into the actual header. Then sure, that counts, because when you're actually putting stuff on the blockchain and then you're aggregating state off of that, that's effectively what a layer 1.5 is, right? So OmniLayer and Tradelayer are the same way with the op returns. They're provably prunable, but they are very much like a part of the archival history. So the analog with Ethereum is that you have like a very big terabyte count for an archival node, but you can run like a pared down one,
a light node or a full node. Yeah,
exactly. So right. So when we do it, we have to reindex the whole chain, which takes some time. So I've been doing this with an external hard drive, and it's not that good because of the HD. The HDD is not good for the throughput on the I/O of the read write when you're reindexing. But SSDs are getting cheaper every year, so I actually believe that people in the developing world will find it tantalizing to farm some of this for years to come. Especially if this actually works on a value basis, the fraction of it you get is worth something and adds up. And I think in a short order we might get more Litecoin nodes that are full nodes running with the Tradelayer client than are running with the Litecoin core, which means we got to port it up to the latest version because their version is faster. So it's a little bit better in those respects. So maybe I got to figure out how to fund it. Like, do I fund it as a corporation? Well, FATF is coming. They're prescribing laws that might be put on the table in the next year or two and go into effect in 3 or 4 years that would effectively target people like me for being a cypherpunk. Arguably, there may be some bros who question my cypherpunk, my one true cypherpunk, my true Scotsman cred. And the Dugan family is Scots-Irish going back. So I suppose in a very loose sense, I am a true Scotsman. So anyway, so yeah, that's we resolved that thread. And yeah, the Tradelayer stablecoin is basically like ideally yield bearing Bitcoin. It's going to depend on the market in the Bitcoin or Litecoin pairs. And then based on that, you can point to on-chain trading of raw Bitcoin for some stable coin. And then you can reference that in a native derivative. And from that basis, you could create your native dollar coin without relying on any oracles, right? And so there's a manipulation question. If a lot of DLC volume references this, there might be a DLC counterparty off in a dark pool that's like a Taproot Lightning Network clearing setup. And maybe they're trying to throw out a bunch of Tradelayer orders out in Tradelayer in order to like spoof the VWAP over in order to trigger a binary thing. Maybe there's even a quantitatively edgy trading system to scam people in that way, where you're getting hit on the binary trigger because they have these rough intervals. And it would be like the new $10 million liquidation on BitMEX type trade for Bitcoin DeFi. And you know what? If that's the case, that sounds hilarious. And actually, that sounds like a good trading algo. So that's where the rubber really meets the road, I think, on this one. It's like, do we have robust pricing power to go all the way to the mat and let liquidity keep finding edge as it comes on? I think so, because we've got this very bare bones, very elegant infrastructure. And then can we solve the Oracle problem through manipulation resistance in the on-chain VWAP data? I think with some fee structure, yes. And there's a lot of finance literature behind that. It's referenced in our white paper. And then we did a lot of interesting R&D with derivatives clearing, and we learned some things about the mathematics around that. So we'll have some related RPC tools later on, so people can use that auditing. And then with the reg stuff, we've got kind of an interesting third way path where, like, if you can be like totally regulated on Tradelayer, and then you can be very like loose on Tradelayer, but just regulate, just cover your butt enough, because you're in a jurisdiction where you're not too worried, but you still have to be worried in this day and age because all of the empires are weaponizing contract. Essentially, they're criminalizing things. So we have flexibility for whatever people really want or need with regs. So yeah, I mean, you just have to plug in some permission hooks, and then instead of making it like there's a central admin, this is what people fear with CBDCs and what they feared with like Blythe Masters, bank chains and things, was that, you just have admins that'll shut it down. But this is just a client of Bitcoin. There's going to be an admin address for activating things. So we do have this line to walk where I'm still the voice of like what is the proper version as we release stuff. But there's if anybody here, let me put this out there. If anybody wants to fork Tradelayer, I will challenge you in WrestleMania this Friday night. No, I'm just kidding. If you want to fork Tradelayer, you could do it. And our license is a copyleft license that is novel, because I'm such a novel guy. And it's I call it open spoon. So if you fork it, then spoon it too, and then you can dilute the money supply, or you can like take shit out or whatever you want to do. I'm actually truly, I'm not going to like be hunting people down and taking them to court. It would just be like a good vibe. So you got to build network effect. You got to build statefulness. You got to get some corporate partners. You got to get some funds, and you got to get retail into it. But this is a new species of DeFi that could actually get a little crazy. I mean, we've seen like a billion, anytime something good happens in DeFi, the forkers come out and a few of them actually maybe hit on some community sauce that makes it worthwhile, you know?
Or they figure it out, right? So like Abra was a fork of Inverse, right?
Yeah.
And they just figured it out. They were like, okay, Inverse isn't providing the right collateral types to their clients, so we're going to fork Inverse. We're going to focus on your own assets, and then we're going to go to Convex, and we're going to blow up to $1 billion, right? So we're just going to go where the money already is and allow people to get leverage on their existing positions.
So what you see though is that the switching costs are so low that something like that will give you edge, and it's very much a focus on like short-term user acquisition bursts, which create feedback loops in price, and then it's like it doesn't matter after, you know, if you can just get to that spike.
No,
And
I think it's a product issue where like there's leverage is in such high demand, especially for stablecoin farming, that
yeah,
it just didn't exist before. So they provided that leverage to where you could take your CVX3 pool and you know go 10x on it if you wanted to, and it just didn't exist
right.
before. So I think these like leverage opportunities that you're seeing are probably some of the more ingenious ones to come. And then that's one thing. And then the other part that I'm seeing is that, um, just like with dollars, every single USDC or tether that's in existence has to be held by someone or a contract or something somewhere for the eternity of its life, right?
Sure.
Somebody has to hold it. Um, when you get billions of dollars into these DeFi platforms, they've got to hold it, right? They're not earning or at least they weren't earning a basis. Maker had all this USDC, and it wasn't earning a basis on it. Yeah, and then you have
It's like the financial engineering of everything,
right,
including the financial engineered structured products themselves are financial engineered at the treasury level.
right.
Yeah.
So this is where like I think it was Frax, like Frax is Frax Maximalist, right? Where I think they're doing great things, and they were one of the first projects to use their treasury to start yield farming with it, and then routing all that back to their token, right? To where they could have stable coins, but then use the collateral that's backing it, or at least partially backing it, to then go off and accrue more value, which is now doing
Sure.
it tens of millions of dollars a year.
Well, that's the nice thing about, like, for instance, what Kento is doing. You can just plug into existing Solana systems and get the rest, and he just focuses on like doing one thing and kind of making sure that the economics around the negative interest versus the insurance fund in and outflow
Yeah,
works. And if you can do that, then it'll continue to do its thing. It might not be the best performing coin, but it'll kind of trend, and its internal numbers will look good.
yeah,
And then, with a lot of these systems, there are so many weird governance edge cases and combinatorial edge cases, and they often involve people who are very greedy. And I've been, just you start, you don't have a lot of money is mostly the part of it. So you're scheming about leverage that you could put on to really, really get somewhere, right? And like my clear loop example is like a CFI equivalent of that. So, if you rehypothecate a secured loan over and over again, you do stack up like 8x leverage. You can just put that on with the derivative and have it all cleared in one book, like the way Deribit does portfolio margin. So the ETH MEV dynamic is essentially like, let's have a better sort of Deribit portfolio margin, like liquidation clearing model built in to the core loop of what Ethereum is, because of all these economic externalities, which sounds good, I guess. I mean, it's smart. It makes sense for them to do that. And my thing is like, what if it was all just one clearing engine? So we'll just have Aave and Uniswaps and DXDY's functionality just on one multi-sig address that you have, for example, or a handful of them under an HD wallet or
yeah.
with other backups. So we'll solve this custody stuff, like all these people getting their MetaMask swiped. I hate to see it. People got lazy on web wallets, man. So we're doing meme wallet so that we have something for new people They can buy ALL. They could have some stable coin. They could mint NFTs as an artist. They could buy and sell NFTs. Seemed a lot cooler 2 months ago. Um, so I was like I was making all this money flipping NFTs. I'm way into it. I'm like, we gotta do an NFT product. And now it's like NFTs are so asleep right now. But I know it's a good long-term infrastructural bet, and I'm using the API we have set up to do my NFT game, which is Infomorphs. So I've got a Solana mint going on. I'm going to do one on Tradelayer as a crowd sale. So you can do crowd sales if they're not securities. You can just sell art. Don't like securitize the art by making a bunch of promises. Make it a vibes based thing, connect with your community. And then if you're like a hacker creative, like I am, like I love Canvas Sketch. It's so fun. Like I'm super vibing when I make the Infomorphs art. I'm listening to Ludwig Göransson and I'm just like playing around. I'm like, oh fuck, that one's really good. Like, what if I do this? You know? And it's like designing video games when you're doing rapid prototyping. So then it's like, well, what if you're also rapid prototyping a video game while making generative art? That's pretty cool too. So like honestly, like there's a part of me, if I could just make money just doing fun creative stuff and keeping it indie. I don't like all this corporate NFT game stuff. Zynga's getting into it and everybody and their mom is getting into it, you know, and it's like it's not going to be good. So where the NFTs have to go is not only higher quality bars, but in these fun little indie village sweet spots where it's like high quality, kind of artisanal vibes. It's not so corporate. And then I think like music NFTs have a lot of potential to go mainstream.
Yeah.
And not in a corporate way. It's going to be something that corporations buy into, but that creeps up. So I don't know if I'll nail that. I mean, there's so many people like going after NFTs, but as a game designer, I was very, very ennobled by the idea that it's time to have a new renaissance in indie games. So, you know, there's more to life than finance is what I'm saying.
Yeah.
And, but if you can make money off of the art stuff, then that's a good life too, man. And, the way people price these mints, it's like greedy as heck, man. They sell out like 10K for like 1 sol ETH or for 0.1 ETH, 1 sol each, excuse me, or 0.1 ETH is what I meant to say. And they get like $1 million in revenue. And it's like a 2-month project. You're going out for $1 million. Come on. Like that's like a fundraise. That's not revenue. But so people would just stupidly jump into these things. And I had to trade in and out. I traded in and out of a couple of these. I bought them in and then I got out of it for a small loss. And it's like, this project's going down, dog. They bit off too much. But what if there was like a cottage industry of people who make these like really cool little things and they make like 20 or 30 grand here and there and they get by on that, you know? I think that could be very positive. It's given me a new insight into the future of culture with the Zoomers coming in. It's just better vibes all around. And you can tell the people who have the worst vibes are like the biggest NFT haters.
Yeah.
So
yeah, I mean, it's just fun. I mean, I heard like Bitcoin Tina this morning on a Clubhouse, like riffing on a person.
My man, I love Bitcoin Tina though. He really was very kind to me and like a mentor to me. Yeah. But also he is a super character. So continue, please.
Oh yeah, just talking, just like somebody. He's a very smart guy. I'm sure he understands like deeply about what NFTs are. But like, if you don't like them, there's this like chasm of. At some point, you can know everything there is to know about NFT, about how they're secured, about how they're made on like whatever chain that you're using, what the copyright aspects are, like, you know, it may not actually have copyright in certain jurisdictions, and like all this shit that like the NFT haters don't like, right? And then but I think this is like the mid-twit position where the mid-twits are like, they're the ones that don't like it because they just don't see any fun in it, right? But then at the far end and the low end, people are just like, I like the art, I like it, I like the JPEG, right? You know, I want to buy it, and they don't even think about it, right? Yeah, it's a good JPEG,
well,
right? And so
I think part of it is with the art market is that the top of the art market is people like Steve Cohen or Sue and Kyle who have made so much money being long derivatives and trends or what have you that it feels great. It's like, what can you possibly buy? It's either I'm going to buy this or I'm going to buy a super yacht. And I know if I buy a super yacht that I won't have as much prestige as somebody who buys this. So I'd rather, and then I can actually, might actually appreciate. So it's actually,
Right.
it is smarter than buying the super yacht.
One-on-ones.
Unless you're going to go all in on super yacht living and like you need like a harem, you need a security detail, you need drones, ordnance, hydroponic gardens, solar, and I'm talking like you pay no taxes. You are like a one man, a little state, kind of like L. Ron Hubbard, but more high tech. And if you're not willing to commit to that, you shouldn't buy the boat.
Yeah.
But you could still buy the art. You could be married to Beyonce and you could buy the art, right? So that's the right move. So then this fuels the greed aspect of like, well, if I pay $2,000 for this painter's piece, maybe this painter will be hot with the millionaires and I could resell it for 80 grand or whatever.
Well,
right?
I mean, this is what happened with the art block stuff. I was minting a bunch of art blocks like early on.
Oh, congratulations.
Just because I was like, wow, this is cool. Like, I like this.
Yeah.
Like, let me just, I have, I want to just mint a few, and then, it does what it does eventually. Like, it caught on and people just went crazy for it. But I think I think with the NFT thing is like, people like it. Artists are figuring out how to monetize themselves so they don't have to be broke ass poor all the time. And, the gall of a Bitcoin maxi just to sit there and be like, yes, you don't know what you're talking about. These just like,
well,
just buy Bitcoin.
It's actually entirely historically consistent. If you study art history, you'll realize that the relationship between fascism and hating certain kinds of art is again a very high correlation phenomenon.
Yeah.
And in fact, if it weren't for this idea that artists are bad because they make us think about bad things, therefore we should kill them all.
Yeah.
Like that's like literally like that is what Hitler painted thousands of actually rather lovely, but what were considered mediocre realist paintings back in the day. And there was a Jewish businessman who purchased a number. He was like my not so fast or something, or this other bro. I don't know his first name, but I know his alias. But he bought like 8 pieces of mine. Like a few people have actually done that. So it is a great connection. And the poor guy couldn't make it out of Germany with the Holocaust because of bureaucracy. He tried to write a letter to Hitler so Hitler would give him a ticket out, and didn't work. So anyway, so that's very bad. And maybe Bitcoin maximalists are equally as bad, is all I'm saying. I'm not trying to assert anything else about economics or the future. All I'm saying is, like, and then Ted Cruz is your best friend suddenly. Now, Ted Cruz is championing a bill that will decriminalize marijuana tokens in greater than 10K quantities, and other tokens. So that's and Bitcoin trading and such. So that's good.
I think like, the whole maxi thing was like fine back in 2017 when there was just copies of Bitcoin, but I think like the cope on ETH has just existed for too long, and now that we've seen, like,
I don't love ETH though. I've got like serious criticisms, but like, I respect ETH for what it is.
Right. They don't respect the builders,
which is a gas guzzler. It's an SUV.
Sure. Actually,
it's a popular SUV.
Sure. Let's talk about this actually.
Okay.
I think that, ETH is making like $80 million a week in fees.
It's serious revenue. Yeah.
Like 100 times. The other day it was doing 100x the fees that Bitcoin is doing.
It's like that Groucho Marx quote.
Well,
nobody goes there. It's too crowded.
Yeah. But here's the thing is that, like, for Bitcoin to survive when the block reward subsidy declines, somebody's got to pay the transaction fees, right? And I was just doing some basic math, right? Where I said, okay, let's take a look at the fees that's being paid for Bitcoin, and let's just assume that it gets to the same level of fee dynamics that ETH has right now, which is around $80 million a day. Like, how much per transaction is that going to be to make a?
Well, you could, yeah, I mean, so like essentially what Nick Carter's thing was in a paper a few years ago in 18 was that it's all about batch aggregation, right? So
Mhm.
like what's funny about this is that SegWit got the fee level back down for Bitcoin,
Right.
just like they promised.
Right.
But the reason for that is that the majority of the throughput were these large output batch withdrawals, and SegWit specifically makes those more byte efficient, period. So you wouldn't have seen SegWit get as much of a benefit if it did if Bitcoin were not in fact very centralized in terms of its not in terms of the HODL core, which have 1,000+ days destroyed on their addresses or what have you, but rather at the level of the throughput usage, that the throughput demand is inter-exchange with, right? So like we need the DeFi,
Right.
and then with the DeFi, you can batch aggregate things, and then you can have that 80 million a day. How you can trade $1 trillion a day in derivatives notional, and it's worth it, right?
Well, hold on a second. Let me ask you two questions. Um, if people okay, so let's just assume a couple of things. More institutions are going to come into owning Bitcoin, right?
Absolutely.
They're probably gonna hold their Bitcoin with a uh, uh, custodian,
By and
uh,
large,
right? And that
multi-sig
custodian,
though could be.
right? And that custodian might offer OTC services where the Bitcoin stays in cold storage. They just make an accounting. They just make a change to the accounting ledger, right? So
We're
for
getting to Bitcoin banking.
right, exactly. So $1 billion in Bitcoin could be exchanged between two parties, but no transaction ever takes place because it's just settled on a
When you could do it in the Lightning Network,
right. Or you could do it
but
in
you
Lightning
need to do it in
Network.
like a bilateral channel, or there's a few ways you could do it. You could do a
So
submarine swap or whatever.
right. So if people think there's good enough assurances to make these type of swaps, uh,
I
they're
don't know
always
about
going
for
to go
that
for the
throughput.
cheap. They're always going to go for the cheaper one, right?
Sure.
Right. So if let's just assume that like more and more institutions come in, they start settling off chain more. Uh, like, where's the demand for the fee market going to come from? If people can just settle Bitcoin on their own without having to go and pay $1,000 for that transaction settlement, who's going
Yeah,
to pay? Who's going to pay
we should
such?
use a Bitcoin representation on the Fed's CBDC chain
Well,
instead,
and here's my second
right? Why
question. Then
not?
here's my second question.
It's the
Then
same.
is like once in 2140, after all the Bitcoin has been minted, does it actually have to stay on the Bitcoin network? Can we just move it somewhere else and have it
That's what
exist?
everybody's doing, but I don't love that because you're basically just putting in your Bitcoin with BitGo, and then BitGo is like C DeFi style importing whatever WBTC functionality you get. There's some more sophisticated mechanisms. Interlayer is a Polkadot chain.
Sure. Let's
Polka,
just assume that like decentralized bridges become the norm,
yeah,
right?
maybe they're pretty good. I mean, they're all. The problem is unless they activate something on Bitcoin at a root level, those bridges will at the end of the day just be glorified multisigs.
Right.
So we still need to do more even to achieve the bridge future of Bitcoin where it inherits all this functionality via bridging. Now, what my vision for Bitcoin is that we do an opcode where you can put Bitcoin into the opcode, you get a token, and then you redeem any fraction of that token, and there's like this big decentralized registry of all these little cubby holes, so you can pull the UTXO out that way. So that way we just wrap UTXO to account based, and with the account based we just import whatever layer logic people want to do, and you inherit all these things that I'm packing together into Bitcoin that way. You could also do it within this Lightning Network 2 of 2 multi-sig scaffolding. I don't, and I'm competing with that. And you could also do it with some kind of married side chain, you might say, like Stacks, and I'm competing with them too. And Stacks will be able to do more things than Tradelayer will be able to do. Although we'll see. Like I might use Arweave and kind of patch things together. It might be pretty good for games anyway. But so yeah, games is a use case everyone points to when you have to justify all the top heaviness of a VM full smart contract system, right? But for like in finance, there's really only so many things. There's a spot trade. There's metadata attestations for RAG purposes. There's lending and some torque. It could be a greater than 100 LTV. It could be less than 100 LTV. And then there's swaps, futures, and options, and that's pretty much it, dude. Like, and then there's wrapping derivatives as tokens so that they become transferable. There might be more, but it's like Charun Titra type, like galaxy brain type shit, or like these paradigm guys talking about like Ricks and Mortys with the next level DAOs for the NFTs. You got to keep diluting the DAO token holders so they stay active. I don't know about all that, but maybe we can just get the basics right. It would be great, because then we could get people all over the world being able to have diversified portfolios in addition to the speculators that kind of grease the wheels with their blood or their victories, right? That all creates at the center a lot of people who just have a simple, predictable experience where they serve their savings needs and their business needs. And that's what's going to drive the transaction fees and keep Bitcoin sustainable, so that the volcano miners in the third, literal, a new sense of the term third world, not like, oh, crappy places with no money, but like in opposition to China and the US order, right? Or not in opposition, but in parallel, right? Like that's what Mao meant by the term third world, was that they're not with us and they're not with them. And I mean, he's the Chinese guy, so he would know. But
what if that's not enough? What if that's not enough to drive fees? Because like, if Bitcoin, who's going to pay $1,000 for, like, what kind of person is going to pay $1,000 for a Bitcoin transaction?
Well, you might
consistently over and over and over and over again.
Yeah, but you might be able to pay $1,000 while agglomerating other people's fees in the sum of $1,050. So you're doing a wholesale batching service to clear.
I understand. I understand the batching, or like, I just, there hasn't been any indication that people are willing to pay on a consistent basis high fees for Bitcoin transactions yet.
But what's your argument that Bitcoin needs a bigger block size anyway in order to
I don't even know.
Right quantity?
I mean, no, the block size thing is over. No Bitcoiner.
Well, and we have Litecoin for those, right? So Litecoin has effectively a 4 megabyte throughput per 10 minutes.
Right.
So there's your 4x right there.
So no Bitcoiner is ever going to increase the block size ever again.
Sure,
right? It's everything about Bitcoin's economics.
And if I talked about it, I would really be a shitcoiner. And I don't believe in it either. I think let it be its own thing.
Well, okay, so blocks. Let's just assume that maxis get their day. Block size never increases. The emissions rate stays exactly how it is coded right now.
Yeah, no shit coining the inflation tail emission part of it. No.
Right.
Yeah.
Like
shit coining, fellas.
What if I believe that there's too much volatility in the fee market to, like, okay, so there's high convexity. Okay, so let's go over everything. There's
we'll have native feed futures in Tradelayer for the payment processors to be able to go long and the miners to go short, because obviously that's going to become now you're mining. Okay, so let's talk about miner financing.
Right.
Let's talk about miner financing. So you are the newly elected communist capitalist Bitcoiner ruler of Paraguay, and you are going to make a bold or you're the Nazbal Nayib Bukele of El Salvador, and you want to issue Bitcoin denominated bonds, and you do it, and people buy into it for some reason. They trust you enough.
Yeah.
Now, Bitcoin Teen is not going to buy into that, but I did a poll, and some of my Bitcoiner friends are like, "I'll sell the CDS," so that way it's kind of synthetic, but I don't have the direct. Well, I don't get, but then if they default, you're fucked anyway. I don't get the difference, but anyway, so people are like are kind of warm enough to the idea because of what it represents. So what would it? But like whoever borrower is, somebody sells 10,000 Bitcoin bonds, and what do they do with the money? They go and invest in shitcoins. Well, hopefully not, right? They invested in Bitcoin mining because this is a great way to get a Bitcoin return, especially when the price is so much higher than the production cost. And they're going to get it even better because they're going to get the volcanoes working for them, or they're going to get the dams working for them, right, in Paraguay. So this is the stranded energy thesis, and it becomes very economically valuable. So it all works, let's say, for the sake of argument. And the thing is, your difficulty, you have a fixed Bitcoin denominated rate of cost of capital. So now we're thinking in Bitcoin. We're maxing Bitcoinization. Yeah. It just happened in our minds. We stepped into a magical new world where you can get away with Bitcoin denominated accounting because your borrow is in Bitcoin, right? So it makes perfect sense. If you actually did sell the Bitcoins you borrowed and it went down, you're short, you made a profit, et cetera. There's all these things apply. And on the face of it, it's a low cost of capital. It's like 2%, 1.5%, something like this, right? So it seems good. So you could rehypothecate it. You could borrow secured against it. I mean, let's say Citibank in the future will give you like 3%. So you're all in. And they give you like an 80 LTV. So we pad it up a little bit. So all in, your cost of capital is something like 4 point something percent. So this is actually a reasonable form of financing. And my prediction, instead of hyper Bitcoinization, is that this kind of debt becomes in a world where inflation is uncertain and the race to the bottom has just begun. Only one denomination will be the true cost of capital, right? Because you don't know what your cost of capital is when you're issuing debt in Turkish lira, and the lira is going the way of the dodo, but like forever. Or like you don't know what your cost of capital is in pesos. You have 100% coupon. It's not enough. You underestimated the Kirchners, or whatever, the Paranists. So no, you got to do it in something that you can actually plan around, and then you add. Well, if the dollar has 5% inflation, though,
but it won't
if it sustains at 5. If it sustains at 5, it would be kind of low inflation, in my opinion. Like I went to Uruguay after spending years in Argentina, and I asked the cab driver, and he said it was 5, and I said, "Wow, it's pretty good. It's like a low inflation rate, So, like in the 70s, it was in that range for years. So let's say it's just 2 to 3 anyway, right? And like I think it's the predictability that has the macro is really just a lot of human behavior, and so I think everybody anchors on this belief in that, that the Fed rate is meaningful, and that's what kind of holds it all together. It's like the way the UF in Chile, I always talk about this on podcasts, reduced the inflation in Chile because banks could denominate a predictable real return, and then the saliency continued to be a negative feedback loop instead of positive, right? So what I'm saying is maybe actually you're right. Maybe the U.S. actually makes good policy decisions, and it allows the commercial sector to rebase. Never mind, it's going to go full El Salvador we're going to get Fort Knox storing YubiKeys and cold cards, right?
No, I don't think that.
Probably not, right? But it doesn't, it doesn't need to be. But the commercial banks custodying it and offering lending against that and putting that into clearing, that's big enough. You don't need the central bank to buy into it to get the big pop. So now people can finance, but like before we get there, though, we start with this simple use case of the miner doing it, okay? Because the miner for sure has a reliable, a semi-predictable Bitcoin-denominated income stream currently at a quite good ROI. So the difficulty in practice is kind of like the bond price. So if the more it goes up, the lower the yield, right? But they're actually short, unlike being long a bond where you're like, I'm getting my coupon, I had the low cost basis, I could resell it. You're kind of happy on both fronts. With investing in the Bitcoin bond of an ASIC, difficulty going up, the yield going down, it's not actually good for you because you don't get a fixed coupon, you get a variable coupon, and like right. that's what it's pricing. So you're short a fixed rate on your Bitcoin debentures, and then you've got this variable rate risk. So if you could buy a difficulty future at a reasonable premium, you would be able to synthetically construct a fixed for fixed arbitrage in Bitcoin. Okay, so you're with me so far.
That. Yeah, I got it.
So it's the devil in the details is how much premium, and then this is a conversation that I had with Bitcoin Tina and Jack Mallers a few years ago. And I think Jack Mallers just gave up on trying to do Bitcoin derivatives and focused on semi-centralized payments, and he's had great success with it. And so God bless. It was a funny conversation, but and they didn't get what I was saying, so I'll tell it to your listeners. Maybe
I understand it. So let me just describe it back. So, your Bitcoin miner, right? So you know how much Bitcoin you're going to be getting on a month-to-month basis, pretty reasonably, right? So that allows you to short the futures, or at least a physically delivered future. It has to be physically delivered. You can short the physically delivered because you're going to deliver the Bitcoin at the end of the month, right? You know how much profit you're going to have. You know how much Bitcoin you're going to have to deliver. So you can just short. You know, now you have fixed costs.
Let's say it's not physically delivered because we don't have the opcodes to do that properly. Let's say, but you get or you get synthetic Bitcoin, and then you can go to a tight one to one-ish bid ask spread book for swapping that out, right?
So it then become, or even cash. I mean, let's just say,
sure.
But yeah, cash or physically delivered. But let's just say we have physically delivered. You deliver the Bitcoin, right? But you're able to hedge, so you fix your costs essentially, and you go delta neutral. You get a little bit of basis. But what you're saying is that in addition to that, because it's not enough, you have to have another contract which prices in the difficulty adjustments and also the increasing cost of the ASICs.
So you're short Bitcoin, you're long a miner, and being long a miner means you're inherently short difficulty. So you try to neutralize that. And so flatten your variable Bitcoin return.
So by
going long,
by owning the miner itself, that's a depreciating asset, right? So because the difficulty is always going up, so you have to be.
Well, not necessarily. There have been plateaus that have lasted for some time as well.
So you essentially want like a long contract that would allow you to go long on the difficulty increases. Right.
So the problem that I discussed with Bitcoin Tina and Jack was who are the natural shorters of this contract? How can you really, because Jack is the guy who can get in with the room with these miners, and they weren't able to figure it out because who's the counterparty and the size that we're going to need,
and people selling the machines.
Exactly. So this is what I nice jump there. So yeah, essentially, if I or let's say another bald guy who could probably pull it off would be Mike Novogratz. So let's say Mike Novogratz decides to become more of a Bitcoin maxi than usual and invest specifically in Bitcoin ASIC development in the United States. We're going to do it we're going to do it upstate. They're going to give us tax credits. It's like kind of we're going to get like 40% of the jobs are going to be like to like these groups. So it's like a really like pro-social thing. That's how Mike would do it. Right. And then, we're going to issue this thing with like a reverse merger. So we can just go public right away and like raise like billions of dollars or one of these SPACs or something. And that would be the way, before I would have said Reg A plus and it's not even enough. So yeah, that would be the way they do it nowadays. So now you've got these, a new, it's a picks and shovels play, guys. They're on CNBC. You could really market this thing nowadays. Back in 2019, it was more of a thing in the future to talk about. But yeah, totally securitize a factory to build ASICs better, and how much better. And there's actually a lot of it's not entirely convex, it's somewhat logarithmic, but there's an economy of scale to getting more billions together in order to improve the bang for your buck on those. So the cheaper you can make them, it's sort of like buying bonds under par, cheaper, except there's no par in this case, but you get the idea. And the par is, the differential between the production cost and the current spot price, I guess.
Yeah.
So anyway, so if you could like the best thing with corporate finance is if you can like hypothecate your own shares without diluting them necessarily in order to borrow money and do things, right? Or you can use them as a form of financing for this kind of hedging. So maybe it would be Bitcoin settled. Maybe it would be settled in these shares and they're liquid enough that it's more convenient for the seller that way, and that's how you get the market to form. So either way, if we can just hand wave that we can actually get someone to come out and sell billions of dollars of notional equivalent on diff at some premium, or maybe it's a swap, so they've got that incremental thing. Weekly tenors and monthly tenors don't really mean that much for difficulty. You got to go quarterly or like yearly. and it's hard to go much beyond that, right? So it's kind of like Bitcoin. It's just a volatile thing.
Couldn't you have a swap? Wait, couldn't you have just a difficulty swap contract where people are gambling on the difficulty?
Yeah, it might be better to consolidate it in just a perp, but you still want to have a tail so people can go long, fixed, and short front. Like the old curve trade, the basis trade.
Right. Yeah, but I mean, but it would come down to like how the contract is. But it seems like you could just make a perpetual, and that would fit the bill better than like a future or something like that.
I think because you're deeply illiquid as a investor in a factory that produces ASICs, more so than as a miner, because miners also, like a perpetual swap, have this. If you're in a pool, it gets intermittent. Like it's not so intermittent. It's
no, I don't think the chip manufacturers shouldn't be terribly illiquid.
Well, they're liquid in the sense that they had to raise all the SPAC money, for example, to go and furbish this building into a factory, and like there's like a time to production and whatnot. So for that time of production, they're liquid. Then they what ASIC manufacturers normally do is they finance through account receivables, right? And this is what Amazon does in a tighter way on like a 14-day window. Miners infamously can do it on a 14-month window or never, and they just go bankrupt. And thank you very much. I sat next to dinner at my first Bitcoin conference. I was a speaker, and I was sitting next to the Butterfly Labs guy before Butterfly Labs went bust. It's kind of funny. You meet so many scammers if you are not a scammer and you just stick around socially for like 8 years. You just meet so many. And that guy probably wasn't even that much of a scammer. They probably they screwed up they overpromised and underdelivered, whatever it was. So this has been an issue, right? People are suffering that with helium miners lately as well. There's different companies doing helium routers, which is mesh nets are cool. So I support that. Maybe you can do mesh nets on Lightning Network without a token, but it seems like these token-based things really get a lot of user acquisition more easily. So there's, the network effect argument might go against you there. But anyway, getting back to miner financing. So if you have the next generation ASIC market having a security, or not necessarily having security, you just happen to have a very liquid, Bitmain is in the market, let's say, or the next Bitmain. And I've been speculating, I'm not really seeing it, but maybe Elon Musk might decide to go all in on manufacturing script ASICs so you can mine Doge. But it doesn't seem like, because of the optics around the ESG, it seems like, because, if anybody were to really improve the script mining business, it would be him, right? Because he'd mastermind the whole supply chain. And you know what's so funny, man? I had this really cool friend. I've always wanted to talk about him on a podcast. He's like the most zen guy, and he's like tall, and he had like an 8-pack, and he was like, oh, the way to get girls is to just not like, just to be detached and they just fall in your lap. And I was like, I don't know, bro. I'm pretty sure that's not the way to get girls. Like, I think that's
I'm pretty sure it's the right way. You get an 8-pack and then you just detach and then they fall in your lap.
Well, he's a nice guy. He's not a prick,
No, but you don't have to be,
which is exceptional. But a lot of guys who get a lot of girls like that are pricks. So he was like the most ego-free guy. And so he's not like a grandiose guy. He's like a grinder. And he was really into bouldering. So Su Zhu posted about bouldering because he's finding himself through that, I guess. And I said, oh yeah, it reminds me of this guy. He's a grinder. So I looked him up because I haven't spoken to him in like 10 years. And the motherfucker is the director of supply chain at Tesla. So it's highly salient to what I was just talking about. So maybe he would be directly involved in this if Elon wanted to do it. But I don't think Elon is, because of the e-waste and all the other criticisms. And instead he's been like, oh, maybe Doge goes to proof of stake. So that tells me maybe not. But anyway, somebody could do something there. Those script miners are extremely profitable now because you can mine both, and there isn't a lot of competition in that market. So some people look at that as a critique of that network, but to me, there's so many retail people going into Litecoin and Doge, and it's staying pumped. And now we're going to have the DeFi on them. Oh, by the way, we're doing a Doge port as well, and the token on that is going to be called Dog, like with a W. So we will also have like a dog meme coin, but it's got the same fundamentals as the serious coins. And it's going to have pretty much the same functionality. And we're going to make that one more inflationary though. So it'll be like an experiment to see if like the zany APYs really make that more successful than what the cost of capital is from diluting as much. Right. Yeah. Whereas we're going much more conservative with total, and like intermediate with ALL. So there you go. So you get the three not three stooges, the three bears right there. You get the warm, you get the intermediate, and then you get the very. Bitcoin's more of a cold storage kind of chain, which is your point, is that you're inherently reticent to spend on it, but it really needs that. And it's in a bear market on fee revenue while being in a bull market on difficulty and price.
Right.
And that could be very worrying if it weren't for guys like Munib or guys like me sticking our necks out, going against the grain of what people said they wanted, because we know what Bitcoin needs, which is fucking revenue, man.
Like, velocity. It needs
not velocity. Holding. We need more than holding.
Yeah, exactly.
You know?
Yeah. And that's kind of like the whole hodling thing is like antithetical to security in the long term, where you need high velocity.
You need both. People. It's complementary. The problem is a lack of respect. It's not that people are conservative.
Right.
Conservatives add to society. I'm just going to, even political conservatives, if you're like